Do you ever have one of those days in the market as you're watching all the financial news where you feel sorry for somebody who claims to be a pundit like me, wondering how in the world they're going to explain the action? I mean, we had people fleeing into safety of the bonds with the bond interest rates falling as people poured into that sector. In the meantime, they were pouring into the NASDAQ, which is the less safe of the two the three major indices, while they were pulling out of the safe zone of the Dow Jones. I'm sorry, I'm going to do my best to explain some of this to you today, but please understand that there are some days it may not be able to be explained away. You also have to wonder why Tesla dropped early and never fully recovered. Well, hints could be found in what happened with the other risky growth stocks. That's my special category, the risky growth stocks. I'll have to put my name on it someday. All right. We'll also talk about Elon Musk and Twitter. That will be later in the program. So if you like this kind of content, this is the Wednesday show where we always talk about what happened in the markets on Wednesday, what's been happening in the news with Tesla. Of course, we do more financial information on Friday night and on more news, general news on Saturday, and financial news on Sunday night. So those are some of our regular programs that you may not want to miss, which is why you would want to hit notify after subscribing. Getting lots and lots and lots of more people now that are part of that crowd. You may want to join that group as well. And then Patreon. Yes, we would love to have more folks on Patreon to help pay for the expenses of the show, including making it worth my while to continue to do it. All right. The CPI report was almost exactly as expected. And therefore, Mr. Market seemed to feel really good early on. It was actually a little better than expected. And the market seemed to be reacting like you would expect the market to react. The market went up. All the markets went up and Tesla went up and everything just seemed normal and hunky-dory. And, who was surprised? Well, sometimes the Mr. Market goes and they take a little deeper look at the numbers, and they saw that the numbers were heavily affected by housing, so that it was even better than that. So, because housing is a lagging indicator. So the fact that it was still in the numbers that were shown would indicate that all is good, and that would mean a very much more likely case that the Fed will not increase going forward this year and might even decrease. And there is, some conversation out there that now people are saying, well, the Fed surely is going to decrease later this year. I have not gone along with that idea yet. However, what we did see was that the market decided, well, maybe not. And so there was a sell-off. And then that sell-off on the NASDAQ was reversed. And so the risky part of the stock market, the NASDAQ, went back up again, even as bonds were going up, meaning that the interest rates were going down. So people were fleeing to safety and not safety at the same time. I don't know. That's the best I can do. I'm not sure that I can really explain what happened. So the inversion in the bonds, even though the bonds, a lot of people buying bonds, which is driving the interest rates down, but the interest rates were falling faster on the shorter term and not as fast on the long term. So that meant the inversion collapsed a little bit. Well, it's still pretty big with over 150 basis points on the 2-month and over around 50 basis points on the 2-year compared to the 10. But we're still better than the 200 that it was a few days ago. So all of that to me looked like a pretty good day. It's the kind of day when you would have thought that the risky growth stocks where Tesla is still classified would have done very, very well. But something happened to Tesla somewhere along the line. We'll talk about that in a minute. So tomorrow we have the PPI. Before we get to the PPI, let's talk a little bit more about the CPI. So as you know, I like the Truflation approach, and Truflation does a great job. And you can see that Truflation is showing that over the last, since June of last year, the Truflation numbers have dropped from around a 12% inflation rate all the way down to a 4% inflation rate. A little bump the last little bit of April, but going into May, we started down again. So overall, things are looking very, very good on the Truflation system. Now, one of the things I really like about Truflation is that they go by category. So if we start with food and beverages, you can see food and beverages are continuing down with a little blip toward the end, but food and beverages were showing pretty strong on the CPI. Housing was very strong, not very strong. It was still continuing to show upward movement on the CPI, whereas the housing for the Truflation is showing it continuing to bump even here, but down overall, with rents definitely down. And then the owned dwellings, which is the green line, owned dwellings starting to pop back up again. And that is exactly what I'm seeing. As I've mentioned in a couple of the other shows, I think that housing, owned dwellings will continue up for the rest of the summer, maybe even into the fall, maybe even never coming down because there's just no inventory. You cannot expect the market to continue down if there's no inventory to buy, because people do need to buy homes and they will continue to buy them even when interest rates are 11 or 12%, as we've seen in previous decades. All right, in transport, we're seeing transport picking up just a little bit, but it's pretty flat overall. We're seeing utilities definitely had gone down and continues down. We see health expenses going down and continuing down. We're seeing household and daily items continuing down. Alcohol and tobacco, which has been kind of continuing up. That's been the trend all year. Clothing, which is a very small percentage of the overall numbers, slight bump again. Probably the major retailers finally got rid of a lot of that inventory that was overhanging the market, and now you're seeing a little bit bump up in clothing. That would be to be expected. Communications has been going up a lot. This is it's not a lot in terms of the effect on the overall inflation rate, but it is important to know that that's going up. Education continues up. This is shocking. Based on everything I know, colleges and universities should be shaking their boots over the potential for general, all of this artificial intelligence and the rest to pretty well take over what they do. And that's coming from someone whose wife is a university professor. Okay, so recreation and culture, you can see it's been kind of flat over the year, but bouncing up a little bit the last few months, which might be, this should be seasonally adjusted, but maybe there's a little bit bigger jump compared to even the seasonality. And then others fairly flat and recently on the way down. So I think, as you can see, overall, the Truflation look would be would indicate that we're going in the right direction. So having said that, where is the rest of the market? Why does the CPI behind that? They're still showing it's closer to 5. The Truflation is showing 3.7. I think the major area is that it's affecting it is housing, because housing represents, I think it's almost a third of the total that is being monitored by the CPI. All right, so then tomorrow is the PPI. That's expected to be 3%, I'm sorry, 0.3% month over month. That's up substantially from last month when it was negative. It might be a 0.3. The PPI is going to be a lot more volatile because there's a lot more things. The PPI is almost all products. There's no services really in there. And the products, depending on countries all over the world and what they make and what we make in the United States, and so many different industries. And we've seen that this whole recession has kind of been rippling through different industries. So the industry that I'm most closely connected to, the bicycle industry, is still in real trouble this year. They got massive amounts of inventory they haven't been able to move through. Electric bikes are doing okay, but traditional bikes are not. And maybe by May, June, we'll start to see some of that flush through. But that would be an example of an industry that has really still being impacted in terms of much lower sales. And yet there's other industries like which are closely related, like travel, which are doing very well right now. So we'll be looking to see tomorrow how the PPI looks. Maybe that'll be a big a surprise one way or the other. We don't know until tomorrow morning. So some are saying that this overall CPI so far would say, hey, the Fed doesn't have to raise anymore. This would be helpful for them. They seem to be willing to be a little passive right now. And some are saying, gee whiz, it might result in a cut. That would not be my opinion. I think that they will not cut this year unless they see it really starting to get close to the 2%. And then, yeah, I can see a cut or two. All right. So let's switch to Tesla. They really didn't have a bunch of news today. So couldn't figure out what that big sell-off was early in the session. That big sell-off was kind of duplicated by some of the other risky growth stocks, but not as dramatically as for Tesla. So it may have been an individual or a group of, might have been a trigger someplace. Maybe it was profit taking because Tesla had moved into new territory and over the short term of where it had been in terms of the selling price. So maybe there was some profit taking. Anyway, it sold off and it came back at the end, as did the NASDAQ, but not enough to get back into the green. So we'll see what happens. And it has been running well ahead of the NASDAQ, well ahead of the Dow for about 5 days in a row. So a little sell-off may not have been that surprising, but I couldn't find any news that might have suggested what was happening there. Also, Panasonic, the only news of the day was that Panasonic noted they are going to push back the 4680 production until later in the first half of 2024. This was approximately 90 to 180 days of moving that beginning of that ramp. They're saying it's because they've got some new technologies, some new approaches that are going to help them make it even more productive, but that's going to take them longer to actually get into production. The China numbers came in very strong, of course, for the first quarter, and then for the first week of May, they came in strong again. So I don't think that would have been a reason for the stock to be down. Oh, by the way, the Panasonic news came in too late to have affected the market really today. I don't think it'll affect it tomorrow either, by the way. But anyway, the China numbers, sometimes that does affect the rates, but they came in fine. Both Troy Teslike and James Stevenson have been increasing their estimates for car sales for the quarter and for the year. James Stevenson's, Troy Teslike is way ahead of James Stevenson. Troy is now over 2 million for the year, where James Stevenson is under 1.8. I think that James will be way off on that. When we're already, the run rate, according to other people I trust today, including me, we are currently at a run rate of 2 million. So unless you just stop making stuff, you start closing factories and say, we'll take a week off or a month off, I don't see how we stay under 2 million. Let me know in the comments below if you can think of another way to get under 2 million this year, other than completely like taking a week off here and a week off there or 2 weeks off. I don't see how it's going to happen, or shutting down entire shifts, which is always the worst way. Anyway, I don't see how it's going to happen. So the market doesn't seem at all interested. This is another big surprising thing. They didn't seem to be at all interested in Morgan Stanley's reporting yesterday, where they're saying that the IRA, you guys all corrected me. I guess I said the Inventory Reduction Act, the Inflation Reduction Act, that the Inflation Reduction Act is going to pay Tesla, that they're going to save in taxes in 2023, $3 to $5 billion, going up to $6 billion next year. Over $6 billion. By the way, I agree with next year. I'm having a hard time getting to their number this year. In fact, if their number this year is almost 5 billion, it's hard to see how it could only be 6.7 or whatever. I think that's around where their number is for next year. If the number this year is 5 billion, next year it's going to have to be more like 8 billion. So I'm not sure how in depth they really went in terms of this analysis, or if they were just trying to make some kind of a point. I will be doing a full report probably Sunday morning, where I take it factory by factory, line item by line item, with estimates of what the sales will be of batteries, what the sales will be of putting batteries into packs, what the sales will be of solar, what this, et cetera, et cetera. So we'll just take it line by line, as much information as I can gather, hopefully by Sunday morning, and we'll come to some figures for 2023, 24, all the way to 2029 in terms of the impact. I've been saying for a very long time that the impact is going to be billions and billions of dollars this year. This is the first time that any of the outside analysts have come in and say, yeah, we're talking about almost $1 billion a quarter. The biggest question I have on my mind is how come the big disconnect with Tesla saying only 250 million per quarter? I hope that question gets asked next week at the Tesla board meeting. It's a huge question and it's a huge impact, and I don't have an answer right now. But why is the market not doing any math and saying this is clearly money coming in, even though Morgan Stanley said, oh, they're just going to use this to reduce their prices. They're not going to actually use it to increase their margins. And as I mentioned in a video yesterday, I think that's utter nonsense. There's no reason for Tesla to continue to lower their prices unless they need to do so in order to move metal. They're not going, even though they would like to sell them for less, they're not going to just arbitrarily start selling the cars for less because they're saving money on the IRA. They will reduce or increase prices on the car based on the market conditions on the ground and moving out, in my opinion, 2.2 million cars in 2023. All right, last on the list here, we got Twitter poised to head to the moon. So Elon was wrong to pay 44 billion, and it's only worth 22 billion now. But all of a sudden, all of these changes, multiple changes over the last weeks, but yesterday, 2 or 3 new changes announced. Everybody on Twitter is saluting these changes and saying, oh my gosh, how come they can make all these changes, these absolutely amazing benefits to Twitter users? Why wasn't the previous company doing these things? Why aren't other social media sites able to make these kind of moves as quickly? And then, of course, Tucker Carlson announced that he will be using Twitter as his new place for his punditry. You know, I know you guys remark that I have a trouble with that word, so I don't know. Anyway, Tucker will be coming to Twitter. That's where he'll be doing what he does. And Elon reached out to Don Lemon and said, hey, you ought to come over too. That would give us somebody on the somebody on the liberal side of the equation to do their remarks on Twitter. I can think of people that I think that I have a lot more, they have a lot more cred on the liberal side than Don Lemon. But okay, let's get them coming on. But if you start getting some of these major guys to come on there, and you also have all these amazing new features, calling it the one place app, the app to be all apps, replacing so many other places you have to go. If you can do it all in one place, that is the Elon Musk vision. And if we start to see people saying, oh my gosh, the advertising come back, and then Elon starts to talk about profits, maybe lots of profits, and all of a sudden Twitter is worth a lot more money. What do you think that's going to do to other of the Elon Musk ventures like Tesla? Well, I'm not a stock analyst and I don't give stock advice, but I'm just saying. So anyway, if this content was valuable to you, please hit the like button. I really appreciate all that you've been doing, hitting the like button the last couple of days. It's very, very helpful to keep my energy up, keep me excited about what I'm doing here. But there is a lot of great content coming up the next few days. You can look in the information below. The schedule is there all the way through Sunday, and you can see what we're going to be doing here. And so if you subscribe and hit notify, you can be reminded of these upcoming shows. I think you're going to like them. And then, I could use some help. Yeah, it would be very helpful to me to have a little more income coming in for Patreon. So if that is something that you think you can be a contributor to, please go down below, find the link, and sign up on Patreon. It's been great talking to you today.